Hello, everybody. My name is Drew Dosek, and this is Trading the Close. And today on Wall Street, we ripped higher, and that was because of the news that we finally had some sort of details out with U.S. and China trade tariff negotiations. Now, keep in mind, it's just a 90-day pause on the tariffs that were implemented over the past couple weeks. And during this pause, the U.S. is going to apply a 30% tariffs on goods coming from China, and China is going to apply a 10% tariffs on goods coming from the United States. So investors heard this news, reacted positively, and like I said, stocks ripped higher. We are in the green nearly all across the board. There's some stocks though that are having some struggles getting higher. One of which is Netflix, and we'll get into that here in a moment. All right, so let's jump into the heat map. We've got the Dow Jones now up 1,000 points, up 2.62%. Nasdaq up 3.94%. S&P 500 up 3%. U.S. oil also had an awesome day. We'll get into why on the charts here at 1.28%. Gold continues falling down. Makes sense because risk on in the stock market. And Bitcoin actually is coming back, retreating a little bit from its monumental breakout weekend that it had, along with other altcoins too. All right, into the spiders. We've been watching this declining parallel for quite some time now, and I was anticipating price action to curl over a little bit more right here, but so far that's not happening. We are ripping up on the charts right now near the high end of this parallel channel. But if you notice, the high today was 582.58. So we did not fill this 583.06 gap fill, which is right here. That is on watch for tomorrow, which also likely will coincide with the hitting of the top end of this parallel channel. Now, we can always move above this parallel channel and then come back in, and that sort of price action is called a bull trap. We'll see if that happens later this week. I'll certainly be watching, but I know in the most near term, we are extended on the spiders now. You can see here on the RSI, we're approaching 70, not quite there yet. So that tells me we still have some room to run. We could still go up a little bit more, even do what I described there as a bull trap there on the charts. But amazing price action there on the spiders. If we flip into the 10-minute, you can see here we did gap up and then people started taking profit. We put in a bear flag. Notice though this intraday 10-minute bottoming tail, and that basically was the low of the day. And since then, price has continued moving higher all through into the close right now with 2 minutes left to go in the trading day. Into the Qs. The Qs also pushed up much higher. And then we did have this area as initial resistance. And you'll notice this on the charts oftentimes whenever you're doing technical analysis. You may have resistance levels. And if those levels aren't traded through, sometimes they're gapped above. And whenever it's gapped above, it didn't have to exhaust the energy to get through that resistance level. And so now it gapped above and continued running. Think of it kind of like going over a bridge, over a river. You don't have to exert as much energy if you just drive over the bridge rather than trying to navigate the stream and walk and go through the water itself. You'll waste an awful lot of energy. And that's kind of what's going on here when we look at the Qs. So the Qs gapped above this resistance, which now is support 493.46. Next area of resistance for the Qs, 511.19. I do anticipate this level to get tagged in the coming days, very much like the top end of the parallel channel of the spiders. That area should provide very good resistance on the Qs and likely result in a pullback to this area of support, which then could propel the stocks up higher, catching a bounce on that area. Into the SMH. SMH also had another gap above resistance area that you see here on the chart. This is great for SMH. As I've talked to you about in the past, I'm mainly paying attention to this February high pivot right at the end of February. That's when the spiders put in their all-time highs and then collapse down. So if we start reaching this area anytime in the very near future, the spiders should be at least at the all-time highs, if not much higher too. So we'll have to see if there's any divergence or any convergence on both of those charts, showing us the spiders and the SMH could go higher in the coming days. We'll watch for that. In the near term though, resistance is going to be up here at 244.38 on the chart. Into Bitcoin. Now, Bitcoin over the weekend, look at this monumental push. So Thursday, I had trading to close with you all here, and then we continued pushing higher. I almost thought this was going to be a little breakthrough, blow off top, and then come right back down underneath this yellow trend line. But so far, we've even tagged the 50% area of this parallel. And it just shows you, look how powerful these parallels are. they can provide levels on so many different areas of that parallel, mainly the 50%, the top end, and the bottom of that parallel. All three of those levels give me a boatload of data and information to digest, especially when we're moving from an extended point right into one of those levels. Price action is likely going to have to pull back as it's done today. Notice we did kiss this trend line. We didn't exactly hit it. We just kissed it. So this could be a little bit of support in the near term, like next day or two. But I am on watch for Bitcoin breaking this trend line, coming back down, testing the bottom end of this parallel channel. It often likes to happen whenever price breaks into these channels. They like to come back and test where they broke into it. So that bottom end is 96,766. If Bitcoin still keeps pushing, top end of this parallel is going to be resistance at 115,829. All right, into gold. Gold, as I said, a little bit of risk off scenario for gold. Gold's coming down, but notice what it tagged today. It tagged this pivot area and then got a small relief bounce. I still anticipate, especially if the markets continue to push up over the next few days, gold to come down, tag that $3,100 level, as you see displayed here on this inclining trend line. Still a chance if the markets muster a way to keep pushing themselves higher, there still is a chance for us to come down on gold to this $3,000 level, maybe even further down. But notice all that support it's got to get through in order for that to happen. We'll see if all the tariff deals go well. Gold might likely start coming down on the charts. We'll see, but I likely anticipate for there to be some hiccups along the way with certain countries, and deals just don't work out as good as we anticipate. Into silver. Notice what silver's doing. I'd mentioned this the other week too. Like for silver to remain bullish, we need to have trading action stay in this, in essence, wedge shape right here. And since then, price has stayed in this wedge area and has hit up against this declining trend line now several times. So that has weakened this trend line for resistance, and the likelihood and the probabilities are now shifting for silver to now break through this. We'll see in the next couple days if that does happen. First resistance isn't that much higher, basically these pivot tops, $33.67, followed by $34.86. But once this breaks through, as I've said before too, this could have a move up to the $36 to $37 range, granted that we do confirm above this trend line right here. Into U.S. oil. U.S. oil also had a monumental big move today, but notice where it caught resistance. Right here on this trend line, this declining trend line we've been talking about for weeks now. So same thing happens for right now, happened back here. We need to break above the trend line and confirm in order to beat it. Otherwise, that's still the main line in the sand. And as you see today, we are not closing above that trend line. So right now, it's just a really good move. For a move up, we need some consolidation and then a continued breakthrough, which will then take price on U.S. oil to $65.82 or this trend line up here at $70.05. And one might ask, well, wait, Drew, why is oil doing so well? It's because apparently the tariffs relieving stress on the consumer, which then will help the economy, which then would also drive the oil prices up. Higher demand, well, then the price is also going to be higher on the charts too. All of that makes sense. It's just like some big interwoven web of commodities, stocks, and the economic world. And that's just kind of how it works. So back into oil, you can see that we just need to break through there. Any other positive tariff announcements, we likely will go above this trend line on U.S. oil and continue pushing higher up to 65.50, 65.60. Into nat gas. Nat gas also continues pushing higher, and it also secured above this trend line comfortably. So now that flips this trend line into support at $3.60. Resistance on nat gas up here at $4.18. Getting close to near-term overbought, not quite entirely yet. I can see nat gas tagging 418 before it comes back and hits that support area down here on this trend line. Now, Netflix. Netflix was one of the only major caps today that did fall in price action. We see here on the chart, we've only had 3 days of falling, but still that is news to report on considering how much Netflix has gained over the past couple weeks. Now, one has to think that folks were exiting mega cap stocks like the Microsofts, Apples, Nvidias of the world, and they were reinvesting that capital into this stock, Netflix. Well, now once Apple, Microsoft, and Nvidia's, all of those other stocks are pushing up, folks are exiting Netflix One, because it's overbought, but then two, because they have a nice profit and time to take profit, take it off the table and reinvest it into other stocks that are making good moves, which looks exactly like what is happening. This has almost become now with Netflix an inverse play of the mega cap stocks. Should Netflix keep coming down? $1,088 is the first support, being that it is minor. And then we'll have major support right down here at $1,020 or $1,023. Into Amazon. Amazon had a big breakout above this this inclining parallel channel. See, this parallel channel has contained price mainly since 2019 all the way through and just having a poke up above here at the end of 24 into 25. Now we've regained price action above this parallel. So first step accomplished. Second step, we're going to have to move and close above this candle. So I'll be watching in the coming days if we have a move up to close above 211.82. If not, immediate downward pressure would likely happen and pull price down to 203.87. If we do get a bounce from that area, still looking for a confirm above this this candle right here. If we close beneath that parallel, well, then more downside to come, because everything that would have happened with trading above that parallel is in essence X'd out and it is resetting itself on the chart. Then this area becomes resistance again. So I know several steps ahead. Trading in the near term, watch 216.50 and then watch this parallel at 203.87. Into Tesla. Tesla did on Friday closed above this bull flag pattern, telling me we likely were going to start heading higher on Tesla. And that's exactly what we did today. Even though the broader market did push up, this was all displayed here in the charts for a move up on Tesla. Now, if we just do some quick analysis here on Tesla to show you where this bull flag should go to, we should have a move up just above 331 to 342.55. That's where the bull flag should play out. That's a measured move that can be calculated from bull or bear flag patterns. Very helpful on the charts. Doesn't mean it's going to get there, but that means where it will likely start concluding and then probability shift for a at least small pullback. But right now, there is resistance to go through to get to that measured move at 331 and 3 cents. I still think if there's continued momentum, we do tag this area this week. Then eventually, any pullbacks, this area will be support. Notice it's pivot and pivots over here. This is going to be a very solid area of support for Tesla. For those that didn't get into this on the bull flag, you can get in on 290. Should that break, 248.97 will be a great add level for another propelled move up higher. Now, into several cryptocurrencies. Now, Ethereum, over the last week on May 7th, they had an upgrade to their system and made it more efficient, more cost-effective, faster, etc. It was something that Ethereum really needed when they're surrounded by so many new altcoins now that are gaining attention. So this upgrade, it was a Spectra upgrade and a Prog upgrade. So both of those upgrades really pushed and ignited interest in Ethereum. As you see here, the first area of resistance was blown through, followed by this inclining trend line. Now, it did confirm over the weekend inside this inclining trend line. So that now makes this area support. So I will be watching to see if $2,300 holds on Ethereum's chart over the coming days. If it does, this is a very bullish signal on Ethereum. The $2,300 level, and notice it's inclining, that as long as price is saved at this level, we could be moving up to $3,034 and then up to $3,600 on the charts of Ethereum. It's possible and it easily can be done. We'll just need to watch and monitor how price behaves right here at this trend line. If it breaks beneath, the next area of support on Ethereum is $2,094. Into Tau Bitensor. This cryptocurrency has really been on my radar over the past several weeks. And the main reason is its strength in breaking through this trend line. As you've probably heard me say many times over, whenever these sort of declining trend lines like this on the daily chart are broken, price normally likes to break and then curl, retest it for a springboard bounce to move higher on the charts. Well, you notice it didn't break at all. It just curled a little bit, bull flagged, and then kept going along its way up on the charts. So right now, though, if you look at the RSI, we're definitely overbought in Bitensor. But this cryptocurrency with its miraculous strength moving through this area really has my attention for looking to pick up once we get under the $400 range. And then down here, especially in this 280 to 320, I think that this cryptocurrency is involved with aiding in the development of AI. AI is not going anywhere anytime soon. Even when quantum computing hits the scene in about 4 to 5 years for the average user, AI is still heavily going to be involved with all of the work that is being done there in that space. So I think this is a great opportunity to potentially look at. Granted, we get some sort of pullback that gives us a discount to enter in on this crypto. Dog with Hat, one of the biggest movers over today's price action, as you see, almost negating 50% of its move up today. But look where it went right into. It kissed the 618 fib retrace. These Fibonacci retrace sequences are so powerful to help you understand where price action will likely have support and or resistance. So right now, that area right now was tagged. That tells me too, and actually I'll flip it back on, this area too. Look, notice these three candles right here. We had a pivot, we had a small pullback, and then a big explosion move up today. So this area, the 382 fib retrace on a move up, likely will serve as minor support should Dog with Hat pull back down, which is at 94.95 cent range. I do like the support area much more so down here at 70 cents. And the reason being is not because of that fib retrace, because that's actually for resistance going up. Look at all these pivots that occur right here in this range of about 70 cents, under $1. Dog with Hat at 70 cents looks like a good buying opportunity for continued moving higher. Into Doge. Dogecoin too had a nice push up over the weekend. You see, has since kind of stalled out and is chopping sideways. That's good if you're a bull on Dogecoin, because bullish consolidation often leads to higher price movement, which then would be on the chart at 31 cents right here displayed. And then any price action coming down lower on Doge, we actually have several support areas right at 20 cents and then one just under 19 cents right here on the charts, both of which correspond with several pivots and also consolidation areas on the chart. This area should give good support to Doge. Now, keep in mind with cryptocurrencies, these currencies do move an awful lot. So they often sometimes do break through support and resistance levels to a magnitude of 5 to 15%. So you have to go light instead of really heavy on these positions if you are looking to play them. But the good thing about cryptos is that when they do catch fire, they can run, and they can run 100, 180% plus. That's not unheard of. So as long as you're in with a good position and a good average and not overextending yourself, you can make a lot of money on these pullbacks in cryptocurrency. All right, that wraps up Trading the Close. Again, my name is Drew. Thank you guys so much for watching. I'll have some more info for you tomorrow. Until then, you guys have a great rest of the day. Take care.